Hi, I'm Ben, and thanks for tuning in to Landlord Studio. Today, we're going to be talking about the UK property market, the changes it's undergone over the last few years, and how these shifts in both regulations and renter demand should impact your buying and renting decisions. We're privileged today to be interviewing Kate Faulkner. Kate is one of the UK's leading property experts, focusing on consumer education and providing free independent property advice via property checklists and design on property. She's the author of 11 books, and is regularly featured in the press, on the TV, and you may have seen her on ITV's This Morning and BBC Breakfast. Kate also initiated and created the Letting Industry Council and the Home Buying and Selling Group. And I mean, what a CV. It's great to have you on today with us, Kate.
Oh, it's nice to be here. Always like to have a property chat.
Awesome. So we're just going to dive right in. And our first question for you is, considering everything that's happened in the property market, is now a good time to be investing in property?
Well, the kind of nice thing from a landlording perspective is because it's really, for me, I think now a 20, 25-year investment. It's less about the kind of time into the market. Great if you can get in when prices are low, but it's a very kind of hard thing to do. And it's more about here in the UK about finding that kind of golden nugget property on a street that's going to grow in value and deliver a decent rental returns with very little voids. I mean, lots of people sort of tell you, come on courses about the secrets of property investment. Well, there you go. You got it free from Landlord Studio and me. So the only problem with the market just now, as we're kind of summer 21, is that it is what can only be kind of described as frothy. The pandemic has just had this amazing effect, which has never happened before, whereby normally when uncertainty hits, which was what we had this time last year, everybody battens down the hatches and the last thing anybody thinks about is moving home. And this time last year, we had completely the opposite effect. And that kind of still is carrying on. So I think if you're kind of new to investment, then probably just hold off for the summer and use the time to get research, what is that golden nugget of property on a street that you can find. And the other thing I would say is a little tip I've always done is I always buy kind of November, December time if I can. Because everybody kind of goes on holiday, even other investors, and people are desperate to sell. So you can usually, even in a kind of busy market, find a good deal or two in November, December time to try and get to exchange kind of through Christmas. So everybody's a little bit more amenable, a little less demand out there. So bearing in mind where we are in the year, I'd probably just sort of hold off a little, unless you're an experienced landlord, in which case, just getting that right property on that right street is the most important bit.
Yeah, that's really interesting. Obviously, we'll talk a little bit more about the impact of COVID a bit later, but what about some of the sort of recent changes the landlords have had to face, the EPC changes that are coming into effect, the capital gains taxes that have constantly been changed and are going to be raised again, and of course, the stamp duty holiday ending. Can you tell us a bit more about those and what they are going to mean for landlord purchasing decisions?
Yeah, I think out of all of those, the EPC one is probably the biggest one that landlords may not have got to grips with. And just like you kind of have a plan to invest your money or wait for a property to hit a certain house price point so you can take equity out and reinvest, actually every landlord across the country is going to have a plan of how you're going to get your property, if it's not already, to a C rating from an EPC perspective. And whether you kind of like this stuff or not, or whether you kind of agree, we've got targets to achieve. And it's not just landlords that are going to be hit with this. For example, some really interesting stuff happened recently. If you're a developer from 2025, which isn't that long away in property years, if you like, you won't be able to fit traditional boilers like gas and oil builders anymore. You're going to have to go for alternative methods. Well, that's going to massively impact on all properties in the future, be it homeowners and landlords. And although they can't tell you at this stage that you have to retrofit a different type of heating system, which is more energy efficient and puts out less carbon emissions. One of the things that is naturally expected to happen is that by, say, the mid 2030s, the likelihood of being able to get hold of boilers and get them maintained, etc., is going to be quite small. So in your kind of lifetime as the landlord, you may have been landlording for sort of 20, 30, 40, 50 years. Well, you can't do what you've done in the past in the future. So you've got to change your tack. And I think every landlord needs to have this plan. The thing that's a bit frustrating at the moment is there are just now, it's by 2028, you have to try and get your property up to a C rating. There will be some exemptions, but in the main, that's what landlords are going to be asked to do for you to be able to rent it. But there are moves afoot, and we're waiting for, with bated breath, really, for see what happens with the consultation that's out at the moment to bring this forward to 2025. And that doesn't leave landlords much time to upgrade properties. So what I would say, anybody getting into first buy to let, or anybody that's got to do some refurbishment, even if it's just things like painting walls or doing a quick refurb, get a plan in place to make sure that you might have to insulate those walls, for example, insulate the loft at the same time as somebody's going to be painting, and make sure that you have your plan. And it's quite interesting. I mean, I love landlords, but they don't always like spending money, in my experience. And you've got to see this as an investment. You've got to see it as an investment in your customer, because I think PwC have just put out a report, and it says that if you, for properties that were built before 2018, if you make the kind of essential changes that you should to improve energy efficiency, then your tenant can save £178 a year. And you might say, well, that's no use to me, Kate, if I've got to spend several thousand. Well, it is, because that's £178 that they have spare for rent in the future. And that's the way you've got to look at it. And the more energy efficient your property into the future, this is going to really be capturing headlines. And tenants are going to start clicking on to the fact that some properties are going to cost them a lot in utility bills and some not over the next few years. So it's really, it's an investment. It is not a spending of money.
Yeah.
And there are even moves afoot with mortgage companies to make sure they're booked. So it might even affect your financing for the future, and you might get better rates the better energy efficient your property is. So lots and lots of reasons to invest and not see it as a cost.
I was just going to imagine, add sort of that I imagine that it will also make the property more appealing to tenants. So you're going to be able to fill your vacancies faster and keep those costs down as well.
Yeah, you're absolutely right. And sometimes when we're spending money, we forget that it's an investment, if you like, and we just see it going out of our bank account, and we don't like that. But you've got to remember this is a service you're giving, and it's the right thing. It's the right thing to do. And I'm confident you won't get an immediate payback, but you will get a payback over time of some sorts. And it's your job as a landlord. You're a business person. Your business is letting property. You've got to abide by all the rules and regulations. All other industries are being capped with something or having some regulation put on them. It's not just ours. It may feel like that sometimes, but you've got to abide by the rules. And it's the good landlords that will survive, because they know, they can see that and know how to do it.
Let's quickly talk about one of the other sort of big expenses that landlords have to deal with, which is going to be the capital gains taxes and those changes that are happening.
Yeah, so we're all expecting, landlords got away really lightly in March. I was absolutely, I can only describe it as gobsmacked, to be honest. We were all expecting some big CGT bill to come out that landlords were going to be punished with for delivering homes over people's heads, which seems a bit cruel, if I'm honest. And it didn't happen. However, there's a paper out recently, and what I was expecting that to come out with something about the capital gains tax and what was going to happen. But actually, what it's done is it's come out and said it's reviewed the capital gains taxes at the moment, and it hasn't really commented on the actual tax you pay or why you pay it. But what it has said is that there's been some tightening of the rules as to how quickly you have to pay it. And actually what it's saying is there's some real issues coming up, that the kind of having to pay the capital gains tax bill so quickly after you've sold a property, particularly if you've got quite a complex case, isn't easy to do. So if somebody's getting divorced, for example, and they're having to sell property for that reason, there are lots and lots of other things to be considered. So the good news is, and I expect this will happen, that the tight rules and regulations of how quickly you have to pay capital gains tax are probably going to be extended. So that's a good thing. The other thing that could happen, I mean, we already pay, you'll pay 18% capital gains tax if you're a lower rate taxpayer, so that's 20% or less. You will pay a 28% capital gains tax if you're a higher rate taxpayer, so that's typically 40% and above. And if you invest in financials, you don't. It's you pay 18% if you're a higher rate taxpayer, and you pay 10% if you're a lower rate taxpayer. And that's the government sort of saying to everybody, look, we prefer you put money into finance, and if you like property, you can put your money into financial investments that go towards property and earn it that way, rather than into buy-to-lets. That was kind of a real indication of where the government was heading. So we already pay higher tax rates, and we are waiting. There is going to be a few more reports on this, I think, for landlords. So we'll wait to see what they say. But one of the things that was suggested is that rather than pay 18% for low rate taxpayers, you would match that capital gains tax with the tax that you already pay. So if you're a 20% taxpayer, you'd pay 20%. If you were a 40% taxpayer, you'd pay 40%. And that could hit landlords quite hard. So we don't know whether that's going to happen or not. It would be quite harsh if it did, I think. So you've got to kind of see the tax regime at the moment is one of being a good one. And one of the things that I would say, again, it comes back to sort of landlords liking to save money and doing their own taxes. Do make sure at some point this year or early next year, you go and see a tax accountant, because one of the things they can do is they can mitigate tax for you before tax changes happen under the current tax regime. But if it's announced that that tax regime changes in March, if you haven't taken the advice beforehand, there's nothing you can, the tax guys can't magically change that afterwards. So the kind of big plea to everybody is, if you're not seeking the advice of a tax accountant, please do so, because that's incredibly important. You are going to get more harshly taxed. We know that. I can't give you exactly what it is, but CGT is likely to be one of them.
Yeah, absolutely. That sort of leads us on to our next question, which is, if you are looking to buy some property, what should be some of the essential considerations that a landlord should have at the front of their mind?
Yeah, sure. It's a really, really kind of good question on this, I think, and it's quite sort of basic, really. And what you want to do is you've got to work out to start off with, and I think this is the question that's often not asked: is property the right investment for you first? Some people just go straight into it and go, okay, I want to invest in property. And then when I start asking them questions and what they're expecting property to deliver by when, I'm like, well, I'm not sure this is actually going to work for you. And that might be somebody looking to buy one property, or we've even, spoken to people who've got millions to invest. And in terms of what they're hoping to get out of it, it's just not going to deliver. So I think kind of the first thing is make sure that, any investment, I mean, I'm not regulated for financial advice, but typically what anybody who is regulated would say, and it's the mantra that I've lived by, is don't have all your eggs in one basket. So I remember back in the last crash, 2007, 8, 9, property values kind of went down, but actually my shares went up. So you kind of want to make sure that you've got that spread of investment, really. And I think that's the first thing. So I always say to people, talk to an independent financial advisor. You have to find one that's into property. Otherwise, the feedback I get is they just tried to sell me life insurance, Kate, and that frustrated me. So if somebody just says, oh, life insurance, run away. Go and find somebody that's got good set of property clients, or indeed a financial advisor that's investing in property themselves. And I think you've got to be really clear about what you expect from property. And you'll notice at the moment, I've mentioned nothing about property itself, because I think what people forget is you have a pot of money, you want to put it into property to get a bigger pot of money out. And all that is, it's actually investing money. And when you invest any money, you've got to be really clear about your objectives, as I say. So I'll say to somebody, okay, so why are you investing property? And they just look at me oddly and say, well, I want to make money. And you go, well, that's lovely, but do you want to make income? Do you want to make capital growth? Because one of the things that's happened, if you're not familiar with the UK property market, is since the last recession, it's almost like Moses kind of parting the sea. You've either got properties that deliver good income, and typically in cheaper areas, or you've got properties that deliver great capital growth, but don't expect any income from it, particularly after the taxes that you have to pay today. So you kind of have to choose one or the other. And the only way you can kind of get both is if you buy a property where you can add value instantly to it, and you can increase your yield, and you can build a capital growth in to start, because that's not sort of guaranteed for the future. So you've got to be very, very clear on your kind of objectives that you have. And then you've got to remember that you've got lots of rules and regulations. So how are you going to keep up with the 400 rules and regulations to let a property? And again, not mentioned anything to do with property yet, but those are the kind of things that you've got to do. You either have to go with an Arla or RICS agent, or you have to join something. You have to join a landlord association so you can kind of keep up with the legals. So I think those are the kind of things that you've got to think through first. And then you're into things like, ideally, if you can do it locally, that's better. Not possible for everybody. So for people in London, for example, you might want to be looking to buy somewhere else. A lot of people looking at going up north. But actually, I'd suggest, and I think we've got something on this, haven't we? I'd suggest actually look a little closer to home, because you've got the Milton Keynes, Oxford, Cambridge arc that's in place at the moment. And it's really important to look to see where the investment is, infrastructure changes, HS2, all of those kind of things. So then you can start kind of looking at the kind of property side. And you've got to work out the bit I like doing, and it's a laborious process, and you either love it or hate it, but you can't get away as a landlord today without doing it, is you've got to look what's short in supply now, but what's also going to be short in supply in 20 years.
Yeah, probably a much more difficult thing to figure out.
Yeah, but there is beautiful things like local plans that you can find out exactly what the plans are to build the number of homes that are required, and every local authority has to do that. It doesn't mean they always do it, and it doesn't always mean they've done it in a way that's easy to read, and it might be 800 pages, but if you skim through it, you want to find population growth expected in that area, and how many houses are going to be built, and has the local authority got a track record of delivering the number of houses required for that increased population, and has it got an economic growth plan? You wouldn't believe it, loads of people looking at going up north. Well, some of those northern economic plans have zero growth plans. You look at the northeast, zero population increase. So you're going to have to work much harder as an investor if there's no economic growth plan planned and there's no population increase. Well, where's your natural growth going to come from? Where's your natural increase in demand versus supply? There'll always be a street where that'll happen, but it gets much harder. So I think those are things that are quite important. And we all talk about it's the biggest buzzwords online about how do you buy below market value, and you can do it. But I always say to people, I used to do a presentation, it was buy property 20% below market value, find out how. And I get everybody into the seminar, lock the doors, because that was very important. And I'd say to them, I say, right, okay, here's a contract. Which one of you would like to sell your properties to me for 20% lower than market value? They'd all start looking at each other. They go, she's bonkers. We've come to buy. And I go, well, how many here? Put your hand up if you'd like to sell me your property for 20% less. And they're all going, no, we don't want to do that. We want to. And I go, right, okay. But if none of you in this room are going to sell me for 20% less, why? It's not going to be that easy. And then you've got to kind of educate them that you're asking, it's a big ask to ask somebody to do that. So then you have to understand the reasons why. So they're in financial trouble, they need to sell quickly, they're trying to fund another property, they've made lots of money out of it, so they're not actually that worried about it. So it's all about really understanding things from the other person's perspective. Too many people think, oh, I'm going to go and I'm going to buy it for lots of money, less money. But in actual fact, it's all about making sure that you are seeing it from the other person's perspective as to why they're going to have to do this. It's not something wants to do. They're going to have to do it. And how are you going to take care of them through that process and make life a little bit easier for them? Bearing in mind, you're going to make money out of their loss. So you've got to think about things like that. And then the other big thing I'd say is just make sure that you ignore all the media information about house price, what's happening to house prices. Come and read the stuff that we do, more accurate, because they're just after headlines. They're salesmen. You've got to remember all those headlines are sales tools to get you to come and look at the site. And what you should do is always, before you buy, or even if you own property now, is check out the sold property price history online. It's free. You'll like that one. And find out how that property performed during the last recession. Did it go down by 20% like the average, or did it just fall by 10%, in which case it's probably a good buy. So check out that sold property price data is a really, really important tip for everyone.
Yeah, and I guess that you mentioned the Northeast hasn't grown necessarily, and if you looked at the historical data, you could probably predict that it's not going to grow in the future. So having that data available is really valuable.
Yeah, it is. And just to give you a quick example, if I may, so if you look at all the data at the moment, it'll say the Northeast has gone up. It's gone up by 14% in the last 12 months. Well, yes, and a lot of the northern areas and Midlands have, but that's because they were lagging behind. So if you take the average house price today and compare it to last year, it might have gone up by 14%. But for people that owned in 2007, which was the last height of the market, their property's only gone up by 5%. Which means if they own with cash, they've actually lost quite a lot of money on that property, quite substantial amounts. And that's where you've got to have this long view, if you like, rather than this year-on-year stuff, which the media will plug.
Okay, I want to move us on a little bit. So what about landlords who are managing their current properties? So what are some of the key challenges they're facing that you see on a regular basis, and what can they do to try and overcome them?
Well, the easiest one is to say, so during COVID, I think one of the stats I saw were the 47 legal changes.
Oof.
Just in 12 months. So you kind of just think, you decide to take a break when we could, and you have a couple of weeks holiday. Everything could have changed when you got back. The eviction rules, I remember I had such a bad day. I'd written everything to tell everybody that next week, these are the eviction rule changes. It was the Friday before Bank Holiday August. These are all the changes coming up. I was going to take that last week off. Friday afternoon, before they were implemented on the Tuesday, so I'd written all these new changes, the government reneged on it. And they changed the rules. That was Friday afternoon before Tuesday. And it's just like, come on, that was a ridiculous change. And then they changed it. It was so complicated that normally when you write, you have maybe 500 or 750 words to write. And I know this sounds daft, but it's how we tell people. I couldn't tell everybody the changes within those limits. So they were that complicated. So, if you're not feeling very well, if you've got a family issue or something like that, particularly if you're self-managing, these are really, really tough things to try and have to deal with. So you've got to have a way of keeping up with those laws that drops into your inbox and immediately tells you that they are changing. And I think you've got to put a good hour aside a week. I was thinking about this the other day. You need an hour a week to catch up with all of the changes that we've gone. So that's the first one. And I think the other thing is making money is not as easy as it was. Apart from the last 12 months, which I believe to be a one-off, you're not going to make the natural price growth that you had before. There's more of a cap on house prices now than we've had in the past, partly because of the limits on lending. And that's a good thing. It means that we've had kind of anything from sort of 2-5% property price inflation, depending on where you are around the country, and it can differ dramatically. Difference between 2 to 5 is quite huge. And you've got to really focus in and make sure you understand the price growth potential and the rental potential for that particular property on that particular street, because you might have a road of 2-bed terraces with 1 3-bed. And the 3-bed might be a huge success, and the 2 beds might be 10 a penny, and supply and demand doesn't work for those. So that's the kind of detail that you've kind of got to go into, and you've got to forecast your earnings out of your portfolio. And as we mentioned, ties into the EPC. You've got to look, if you thought you'd earn your money because you're going to spend this much on a boiler in 10, 15 years time, well, it might cost you twice as much as that. So that's the kind of thing you've got to be doing. And I think that it comes back to a little bit what I was saying earlier, is understand your area now and in the future. So in the past, all the numbers kind of worked for landlords. Now the market isn't working for landlords as easily. And it's still the beauty of property is even in a bad market, you can make lots of money, but you have to be a lot smarter. You have to plan a lot better. And you have to really look at this as a business every day. You can't, all that idea of armchair investment that was very popular 10 years ago, that's gone. You've got to be active.
It's quite funny that you sort of mentioned making money is one of those key challenges that landlords face. We actually had a user that we spoke to recently, and he realized after he started using Landlord Studio and he started properly tracking his income and expenses, that he was only making £14 a month on one of his properties.
Oh, yeah, it's not a surprise.
So yeah, obviously he took that sort of data and he consolidated his assets. I think he sold that property and increased his profits across his portfolio.
And it's knowing that, isn't it? So and you're absolutely right. And that's where I think landlords need a bit more help. And we had an instance, it was a bit embarrassing actually. I was doing a presentation and it was about, I was fascinated about how house prices performed for new towns. So literally you invent a new town. And I put up this property and I said, oh, look, this investor would think that they've earned all this money. They bought it with 200,000 cash and they sold it 5 years later with £270,000. And they'll think they've earned money. But when you take inflation into account and the costs of buying and selling, actually they've lost 30 grand or something, figure something like that. And anyway, most embarrassingly, the lady that had bought that property was in the audience. Oh. And she had no idea. And fortunately, she was very kind about it. She came up and she said, I did that, and you're right, Kate. She had no idea I'd lost money, and that's where landlords have got to get a lot smarter, I think, and use the tools that are available. As you say, like Landlord Studio, you have to absolutely track every single penny, what's coming in and what's going out, and what's likely to then forecast forward as to how that's going to change in the future.
Awesome. So I'm just I think just the last question. I'm running out of time a little bit, but I'd love to get your take on the role of technology in the future, and how landlords and property investors in general can use it to help them grow their portfolios and their investments.
Yeah, I know I'm not a good technology person. If I'm really honest, I'm a bit clumsy. I quite like some time away from screens. Having said all of that, if you're not into the technology that's available now, you are going to miss out on some of the most fantastic tools to help you be a successful investor. And I mentioned sold property prices earlier. If you're not going on pretty much every day or monthly or quarterly to check what types of properties that you're selling, the type of property that you own, for example, or you're looking to buy, how much is that currently selling for, and how much is that has that property sold for in the past versus what you paid for it, and how does that compare to inflation? Is that giving you a positive investment return versus inflation from a cash perspective? You're gonna miss out potentially on making the right decision for your portfolio moving forward. So that's one just easy way of doing it. And the other side of things, we mentioned the tax side of things. You've got Making Tax Digital coming up in a matter of years. And I love a spreadsheet, to be honest. I know what I'm doing, I understand it, but that's not going to be good enough. And with all the changes that are being made, you are going to need to outsource, if you like, albeit under your control, with things like the Landlord Studio app to help you understand those what's coming in and what's going out, and the tax implications of that, because HMRC is going to require you to put your tax returns in much more often. We've already seen the changes to tax now, where you have to kind of pay it on account and stuff. That's only going to get more complicated, and if you try and do that with spreadsheets, you're going to fail. I certainly would. So you need to adapt the technology that's around. Even something simple as tracking your mileage. You've got to claim for every single penny you can. So you might have got away with not taking on board all the technology now, managing everything yourself on your computer, doing your spreadsheets, doing your files, etc. But I'm afraid that's not going to cut it for the future. And it's not that you kind of have to do it. It's just that if you don't do it, you're going to miss out on so many useful tools that you're not going to be able to run your portfolio as well as you should be able to, whether you use an agent or not. And I think that's really, really important.
Awesome. I think that's all for today. So thanks for taking the time, Kate. We really appreciate you coming on and doing this video with us. Where can our audience find out a little bit more about you and the work that you're doing?
Sure. So propertychecklist.co.uk is the best place to go to. You'll find we do what's quite useful is what I'd call a proper report on the property market each month. So we don't sort of bash out headlines to try and get you to come and view the site. And you can sign up. We do a weekly newsletter and we're big on checklists for obvious reasons. So it means if you've got a job that you need to do, then we try and work with the best companies like yourselves in the industry to try and make sure that we're giving the right advice that's accurate. So yeah, come and see us. And if you've got a question from today, or you're not sure about something, or you've got something niggling, just send a note in. Use the inquiries form, and that gets picked up by a lovely lady called Amanda, who then makes me sit down and make sure I've answered them all every week. So you know, just we're here just to answer people's questions, and we love getting them in because it's really interesting to see what's on people's minds. So yeah, get in touch, and always happy to help.
Awesome. It's been great to chat with you, and I've enjoyed picking your brains on these topics. Thanks again for coming on, and we'll talk to you all next time.